All right, let's talk about it. There are risks associated with investing in real estate. Yes, there are a number of risks, but it is the number one way to build wealth if you do it the right way. Hey everyone, I'm Clayton Morris, the founder of Morris Invest. I run a full service rental real estate company, and boy, I've been through the ringer over the years. I've seen all manner of craziness in the world of real estate investing, but at the end of the day, it is the number one way to build wealth. And in this video, I'm going to help you navigate these things so you can avoid the pitfalls that I've made over the years and I've witnessed other people make over the years. So real estate investing can be a great way to build wealth. However, it is important to be aware of the risks involved. The real estate investing risks, there are many. They're associated with real estate investing. Some of the most common risks include, and I'll just kind of give you a list here, market volatility. Okay, this is in many ways out of your control. Who knows what's going to happen in the market? Is there going to be a war? Will the United States put ridiculous sanctions on another country that actually harms you? What else? Will there be a pandemic that keeps people locked in their homes for a long time? Like all of these things we don't know, and that can affect the real estate market. The value of real estate can go up and down, and this is really out of your control. This means that you could lose money on your investment if the market takes a downturn. If you're buying a property for the sole reason of watching the appreciation, yeah, you could see a downturn, which could affect your overall investment if you were going to sell it in a short amount of time. For me, and I'll get into this in a little while, that's not a concern for me because I'm not selling my properties. When I buy an investment property, I don't care that it drops a little bit in value from time to time. It doesn't bother me at all because I know that eventually and historically that house is going to rise in value, and if I want to pull some equity out of that property down the line, I will be able to do so. But downturns don't bother me. So if you're investing for the appreciation, this may affect you and could be a big problem for you, especially if you're a house flipper. You're one of those people who are buying a house for a short amount of time, looking to make a quick buck, like the 2007, 2008. That's what a lot of people were doing. They'd buy a home and 6 months later sell it, and that was their goal. That's not something I invest for. Another issue that could arise, another risk, tenant problems. Now this, to me, my friends, is perhaps the biggest risk associated with real estate investing. You may have to deal with tenants who don't pay their rent or who may cause property damage. I'm telling you right now, if you're a successful real estate investor, you will have a tenant that doesn't pay at some point. You will have to go through an eviction process. Likely, very likely, but maybe not. If you've got 50 rental properties, there's a great chance that you will have at one point an eviction to deal with. I'm just telling you, right? So if you think in your brain about being a successful real estate investor, then think, oh, I've got 50 properties, 60 properties. Probably you might have an eviction at some point, and you need to factor this into your brain. But if you think from a perspective, I only have one property, then you're thinking small, right? You're thinking small. But imagine yourself 5 years from now when you have multiple properties and you're running a business. Would you be really upset about it if you have to deal with an eviction? Is that going to really bother you? Or maybe you have a tenant that damages the carpet or puts a hole in some drywall. Is that going to crush your life? No. So how do we mitigate that? How do we build that into our overall matrix so we understand that this is part of running a business? This is part of being a real estate investor. Another risk, the costs. There are many costs associated with owning rental properties. How can you make sure that those costs are taken care of and categorized properly so you don't get big surprises? Those costs include property taxes, insurance, maintenance, repairs. Another risk is your lack of liquidity. Okay. Now this is your fault. Okay. Market volatility is not. That's not something you can control. But lack of liquidity, that is your fault. And this is a way to mitigate that risk, making sure that you're not over leveraged in a property, that you don't have cash reserves in case something comes up. Real estate can be illiquid. Okay, that means the ability to quickly get money out of the property is also a big issue. So if you don't have some cash reserves on hand, that is your fault. I'm just being brutally honest here, but if you put all of your cash into an illiquid asset like a home, it can be slow to get, and let's say there's some sort of a family emergency, you're not going to be able to pull that cash out of that house overnight. A sale of a property can take weeks, months even, if you need to sell it quickly and you need to get cash out. So we need to make sure the way that we protect ourselves against that is to have cash on hand and have an emergency stash of cash set aside. Another risk is legal risks. There are a number of legal risks associated with real estate investing. These risks include zoning laws and environmental regulations, landlord-tenant laws, right? So these are all risks that we're going to go over. But real estate is the number one way to build wealth despite these risks, because real estate investing can be a great way to build wealth and protect your family's wealth. Here are some reasons why I believe it's the number one way to build wealth. Potential for high returns. Okay, even just in the appreciation game, if you're playing that, property values have continued to outpace inflation. They've continued to outpace the destruction of the US dollar. So owning actual tangible assets has a real potential for high returns. Real estate can be a very profitable investment over the long term. And you can leverage those assets by pulling out equity and buying additional assets. The value of real estate has consistently gone up historically. This means that while the 401k plans and the stock market was collapsing, real estate has continued an upward trend. You can potentially earn a lot of money from your real estate investments over the course of time. Again, that's not why I invest. I want to be very clear about that. I invest for the cash flow, which is my next one here, which is passive income. Rental properties can provide you with a steady stream of passive income. This means that you can earn money without having to actively work for it. That's right. Imagine that day job that you've been commuting 2 hours every day in traffic to get back and forth. You're trading your life, your time for a paycheck. Imagine if you didn't do that anymore. It's a paradigm shifting thought, right? What if instead I was able to work from home or do the project that I want at home, and my rental properties that I own in another town are bringing in cash flow every month and providing for me and my family? And I don't have to drive that 2 hours and work and put my time for someone else, a boss, to pay me a paycheck. It's transformative, passive income. That to me is the number one reason we invest in real estate. Another major reason is tax benefits. There are many tax benefits associated with real estate investing. For example, you can deduct depreciation, expenses on your taxes, right? And think about, we at Morris Invest, when we work with our clients, because we build new construction properties for our investors who are buying them that are cash flowing, we give them a cost segregation analysis, which can cost thousands of dollars if you hire a cost segregation engineer. Now, there are simpler tools available today to get it done, but what's amazing is you can take that cost segregation analysis on your taxes in that calendar year and basically get your entire down payment from that property back on your taxes. The reason this works is because you're accelerating depreciation on certain aspects of the property, the roof and other pieces of it. It was, of course, changed in the tax law a number of years ago. Now it allows investors to accelerate depreciation on their assets much more quickly, get more of that cash back earlier on in the process in many ways. So if you put up $50,000 as a down payment on a rental property, you can in many ways get almost that entire down payment back on that year's taxes. It's amazing, right? So there's incredible tax benefits from real estate investing. Not to mention all of the added benefits now that the government is throwing in for green energy tax incentives for real estate investors as well. Another great reason to invest in real estate is building wealth. Real estate can be a great way to build wealth. As your properties appreciate in value, you'll build equity. You're also owning a tangible asset, okay? A tangible asset. The US dollar is losing value every day, okay? Fiat currency, government currencies are losing value every day through inflation. And a tangible asset like real estate outpaces inflation. So this equity that you're building up can be used then to buy more properties. So let's say you buy a property for $200,000 in a short amount of time, a couple of years or whatever, it's worth $275,000. Well, not only is your tenant paying down the rent on that property, so now the mortgage that's being paid off, but you're also increasing the equity position because it's appreciated. Now you have this large disparity between how much you owe and how much it's worth, and you can pull that equity out in the form of a home equity line of credit and go and buy an additional rental property. See how this works? See how the snowball effect works? So how can we minimize the risks? Because you clicked on this video because you know there are risks and you're scared about the risks, and I want to help you minimize those risks for real estate investing. There are a number of things you can do to minimize the risks of real estate investing. Some of the most important things include doing your own research. Learn as much as you can about the real estate market before you invest. For instance, my company, Morris Invest, along with our partners at Sedera Wealth, build brand new construction properties in Lubbock, Texas, Odessa, Midland, Texas, Joplin, Missouri. These are just some of the towns we currently build brand new construction properties. Now, before we ever bought the land and started building, we did enormous amounts of research, okay, on job growth, low crime. What are the demographic research of this area for 2 years before we ever laid groundwork on this? In fact, we knew through government plans that certain highways were about to be built. We knew this before we invested, before we bought the land, before we started building. And that's why we're now in the best markets, some of the best rental markets in the country where we build our properties, in the best school districts. All of this was research. All of this was knowledge that we gained. What are the best school districts? Well, that's where we want to build. What are the lowest crime areas? That's where we want to build. What is the highest job growth areas? That's where we want to build, near the universities, near the healthcare facilities, near the businesses going in, near the new highways that we learned that were being built. All of this. Demand. What is the demand for rent? What are the local vacancy rates here? How many, are properties sitting vacant for a long time? If so, why would we want to invest in those areas? We want to invest in areas where the demand is off the charts and people need a place to live. And that's where we build our properties. So please, please, please do your research just like we do. It takes a lot to figure this out, but we do all of that internally. And that's why we have been so successful with our properties long term, because we're building in areas of enormous growth, low crime, and fantastic returns. So you also want to include different types of real estate investments. You might say, well, maybe I'm interested in single families. Maybe I'm interested in raw land or storage facilities or commercial real estate, high-rise buildings, and do that research. So right now in 2023 and 2024, you might have been hearing about the commercial real estate collapse. These are office buildings and high-rise buildings and things like that. I don't invest in that. I invest in residential real estate. So in your research, you may say, honey, wow, the commercial real estate space right now, like investing in office space, is probably a terrible idea. Probably not going to work. These things are sitting vacant, and we are on a commercial real estate collapse right now. That's why so many commercial real estate investors are coming over and investing in residential real estate like what we do, buying single family homes, because we have an incredible demand for housing. We have a housing crisis in the United States. We need tens of millions of homes to be built in order to supply the number of people who need to live in them. Just off the charts. Absolutely off the charts. So I'm going to invest in the areas where there's incredible demand. So it's important to understand the risks involved, right? In the different things that you're going to invest in. Storage units, mobile home parks, raw land. What are the risks involved in that? Look into it. Understand. If you buy raw land, am I able to build on it someday? Or is this designated only for farmland? Things you need to know. Invest in a good location. Okay, again, I just mentioned this, but it's worth repeating that to mitigate your risk, don't invest in a bad area. Don't invest in poor school districts. Don't invest in high crime areas. Years ago, I used to invest in Michigan, and I had good success. I had a couple of properties in outside of Detroit, in the Dearborn, Michigan area. And I love those. I love those properties. Some of my first properties. I don't invest there anymore. I don't invest in that area anymore because people are leaving. There's population decline. Okay, so I want to invest in good locations where there's population growth, like in Texas and other states where you're seeing this migratory patterns from New Jersey and California and the north to the south. And I want to invest in those areas. I don't want to invest in areas where crime is going up and people are leaving and jobs are leaving. Not a good location. The location of your property is one of the most important factors in determining its value. Make sure you invest in a location that's in high demand and that has good long-term prospects. Then another way to mitigate your risks is to get professional advice. If you're not sure where to start, consider getting help from a real estate professional like our team. You can get on the phone for free and talk to our team. You don't have to work with us at all. It's totally free. Just book a call with our team and ask a question, and we'll kind of point you in the right direction, how we think we can help you. Or talk to a realtor, a real estate agent in your neck of the woods to help you find properties. And if your area where you live is not a great investing area, then maybe reach out to real estate agents in other parts of the country that are in the best rental markets in the country. Whatever you do, make sure you're talking to the right people to get advice. Then another way to risk management is to be patient. Real estate investing is a long-term investment. So don't expect to get rich quick overnight. Be patient and let your investments grow over time. And be patient also with the process. So let's say you own 3 rental properties, okay? And about a year and a half into one of those properties, you have a vacancy. The family has a hardship, they need to move out or something, who knows? Or they just need to move, you have no idea, right? And now that property is vacant for a week or 2 or 3 weeks or 4 weeks or a month or 2 months. And they did some damage to the property, okay? Maybe you have to paint, put a new carpet, fix some drywall. That's part of the process. Be patient with it. Don't be hard on yourself. This is life. This is what happens. By the way, that's also a business expense, okay? These are write-offs to fix up and take care of those real estate investments. It's all part of the process. Don't be hard on yourself. Don't think that you've made a terrible decision. Just allow it to unfold and be patient with it. Real estate investing can be a great way to build wealth. However, it is important to be aware of the risks involved. By doing your research, investing in good locations, getting professional advice, being patient, you can minimize the risks and maximize your chances of success. So we have a whole bunch of resources for you on our website at morrisinvest.com. Come on over to our website, look at all of our blog posts that we've written. Great resources there. And if you'd like to book a call with our team to learn more about how you can get started with a full service rental real estate team, you can do that as well. There's a big book a call button right in the middle of the page. You can click on that and jump on a phone call with our team. A little calendar will pop up and you can pick the time that you'd like for us to call you and we'll chat about it. So thank you guys so much for joining us here and working on your journey for real estate investing. Go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time.